Let's go! Bum, 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 bum. Hey, good morning. How are you? Comment allez-vous? Welcome, currency traders. Welcome to the Forex.Today YouTube channel. Today we're going to cover the dollar pairs, the yen pairs, maybe some Swissy pairs, gold, oil, and whatever you want me to cover. Just make sure you ask and ask politely. Why not? Why not just ask politely? And I'll be happy to do that. So welcome, welcome, welcome. Today is what? A Tuesday, I think? Tuesday, April 23rd, 2019. Thank you for being a subscriber. And if you're new to these webinars, if you're watching a recording way out in the future from today, commit, dude. Go ahead and click subscribe. When I start a new webinar, you will be invited. So commit. Kick down, come clean, don't be a holdout machine. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. Hello. I'm the Chief FX Market Strategist for Traders Way. We're a boutique foreign exchange trading firm and sponsor of today's webinar. My goal is to make you a success. I'm going to teach you technical analysis, fundamental analysis. We can deal with trader psychology, all that kind of stuff, but at the end of the day, it's still going to be blood, sweat, and tears for years on your part. I'm sorry, it's still going to be the get-rich-slow scheme. Things like hard work. What do I mean by hard work? How about ridiculous, sickening work ethic? I know a lot of very, 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 very wealthy people. None of them are lazy. None. So you might be good enough, you might be smart enough, but you're still going to have to fight for it. All right? So hopefully you got that. If you got that, you're in the right place because I can show you the way. So anyways, get involved, ask questions, leave comments if you're watching recordings. And then treat everyone else in the chat with respect, and I think we'll have a good trading day. Do you have a particular currency pair you want me to cover right now? We can start off with something new, unique, different. So this is Euro ZAR, Euro South African Rand. We talked about this yesterday. That's obscure. Is there anything else you'd like me to cover today? Hey, Kiwi CAD. Aight. Kiwi CAD. Where would I have a Kiwi CAD? Maybe over here. Joe says, not much this week. Do you know what? Use that to your advantage. Don't sulk, and I'm not saying you're sulking, but a lot of other people sulk. Take this as an opportunity. If you see nothing going on today or at the moment, tell yourself, well, sometime in the future, the market will move. Maybe in 6 months, maybe in 3 months, maybe in 1 month, maybe in 3 weeks, maybe in 1 week, maybe in 3 days, maybe in 3 hours. At some point, it's going to move. You know that. So start preparing. Maybe back yourself out of a 5-minute chart and look at a 5-hour chart. But wait, there's no 5-hour chart. All right, 4-hour chart. Okay, just plan for the future. All right, so what was it? Kiwi CAD, Kiwi CAD, Pound CAD, CAD Swissy, CAD Yen, USD CAD. Okay, Kiwi CAD. La 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 la. Kiwi CAD. I'm sorry, there isn't such a thing. There is no Kiwi CAD. Hang on. Here it is. Kiwi CAD, huh? All right, commodity versus commodity. All right, let's see what's going on. So CAD is benefiting from high oil prices, right? Right on, Joe. Jim, we do it all the time. Join the swing trading group. That's what the swing trading group does, Jimmy. Our weeklies are usually 150 to 250 pips. Our monthlies are 250 pips or more. And then when you add some seasonality to that, Jimbo, what you do is basically string together multiple monthly trade plans into, like, let's say a quarterly plan. So if that's what you need, Jim, join the swing trading group. Okay, we meet Fridays. So we meet Fridays to plan Monday's trade. I know, right? Anyways, back to this. Okay, so CAD is benefiting from high oil prices, as we've talked about over the last couple of days. Oil prices going up. It makes sense. The world is not getting worse. And then, of course, we've had some things like, the United States doing their things with Iranian oil. We talked about that a day or two ago as far as waivers and such. But the interesting thing is it shouldn't mean anything, because Saudi Arabia, do you remember? This whole oil rally started when I covered and most people didn't know it, but Saudi Arabia very dramatically cut their oil output, right? Then we're like, well, that's going to push oil up. So oil's been going up for 3 months or something because of that. But so now we pull Iranian oil supply out of the global market. Oh, yeah, well, Saudi Arabia can fix that. They just go like this. Press a button, fixed. They just turn the oil back on. So, like, it's funny. So oil doesn't have to go up as much as it has. But people is stupid, right? People is stupid. Okay, so anyways, let's go into here. Let's just kind of cover the facts. So what I was saying is CAD is rallying because of oil, and Kiwi is weak because right in here, the R, B, and Z said, yeah, we're thinking about maybe cutting interest rates someday, blah, blah, blah. That's all they need. Future expectations. When you're studying economics, expectations are just as valid as sort of real data. If you expect to lose your job, you stop spending. If you expect to get a raise next week, you start spending money this week. Just how it goes. So anyways, so this is weak, this is strong, so that's fine. What else should we remind ourselves? Well, the basic of matching a weak with a strong is that we need to be looking for down, 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 up, up, sell, down, 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 up, up, sell, down, 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 up, sell. Okay. So on this time frame, are we in the up, up, up? Well, let's check this out. Down, 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 up, sell, roll reversal. See the roll reversal? Right? Down, 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 up, sell. See the roll reversal? Down, 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 up, sell. See the roll reversal? Down, 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 down. Well, there might be like a micro up, but what bothers me is this is a bottom. Okay. So there might have been an up, but that was 6 hours ago. So you might be a little late there. Let's clear this out. What else can we see here? That was price action, by the way. The other thing you could do is you sell retracements back to the 21. And as long as the market is bearish, you sell retracements back to the 21. And you say, well, Wayne, those retracements back to the 21 are not perfect. I know, right? Okay. But eventually, you know what's happening? Every 4 hours, we get a new print. It's not just doing this. but it's also moving sideways a little bit. Okay, it's a moving target. So you'll see in 24 hours, let's say, it'll be more like this. In 48 hours, it's going to be more like this. And you'll say, why didn't I sell it here? Why didn't I sell it there? And that question still remains. Okay, but the basics, right? The basics. Trading with moving averages. That's all that means, right? Down, 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 down. This is your sell zone, sell off the 21. So the rules of engagement I give you in my book is that if you're below the 21, not only are you bearish, but you're aggressive. Okay? And if you're, right, I say the 21's in control. So you're aggressive. If the 55's in control, right, so price is more like here, I'm still bearish, but I'm conservative. Come on, Harvard buddies, go away for now. Okay, make sense? So there's a lot of different ways to look at this, right? Okay, let me clear this out, and I want to add some more time to this. Let's back out. Back. Got you looking for the new thing. It's all right. Hang on. Do I have to go daily on this? Wow. All right. So this is crazy. This is a front run, right? And this top predicts a bottom. By the way, do you notice the trade? Down, 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 up, up, sell. Look, that could have been the trade you did. You could have did a front run here, right? This could be a trade here. And this could be a trade here. They're both fairly obvious. This one's a little aggressive, and then this is not. And that could be what you did for the month. Gee whiz, go away, guys. All right, that's my cohort at school. We're getting close to graduation, and at Harvard, if you get less than a B, you don't get credit for the class. So some people are like right on the edge of getting a B. They have like B minuses right now, and they're like, "Dude, I won't graduate if I get a C plus." Like, yeah. Someone said, I need a 90% on my paper to graduate. I'm like, well, aim for 100. So anyways, so what does this lead? Where does this lead us? Here. Specifically here. Right? And then you can see here. Now, when you look at this time period here, this week, the way that this is set up is we're supposed to hit this zone here early. Like we should have been hitting it today, basically. But there's some holidays and all that kind of stuff. So typically we would be down here looking for a counter trend trade. But that's the target anyways. By the end of the week, we should be here. Okay. All right. But we knew that, 1, 2, 3, 4, 5, 6, 7, 8, 9, well, basically 25, 26 days ago. What is the name of my book? Strategic and Tactical Forex Trading. Now, the interesting thing about it, it was published, I think, almost 11 years ago now, which means I wrote it 12 years ago. Which means I have been trading that way for many, 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 many years before I even wrote the book. And yet you'll open up the charts in the book, and stuff, and they will look like this. Most of them just don't have pivot points, right? So I've been trading the same way for over 15 years, for show, because I've been published that long with these charts, and I still make these decisions. So like where I was just showing you, riding the 21. Riding the 21, that's what it's all about. Ride the 21. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up. Ooh, ooh, ooh. This is worrisome. See, this says it's slowing down, probably because of that bottom. That's on an hourly basis. Okay. Does anyone want to take this north? Well, you need oil to fall, which, right? And you would need New Zealand not to be bearish. Okay. So how about this, guys? This is why I kind of get all weird when people ask for a pair like this. Does that make sense? That, let's put it this way. If New Zealand is no longer dovish, but it's hawkish, it's because global macroeconomics for that economy have turned very positive. Let's get to that point. How many people understand that? That the Kiwi is weak because the central bank is not confident in their economy. And their economy is an exporting nation, so by definition, it's essentially a report card for global macroeconomics in general. Okay? So how many people understand that process? That for the New Zealand dollar to be bullish, you have to be bullish essentially on all macroeconomics. Because there's nothing wrong with the New Zealand legal system and economic system and political system. It's stable. So if the RBNZ is not confident, it has to do with their dealing with their trading partners. It's just business. Just because it's a sovereign nation doesn't mean it's any different from a corporation making decisions, right? So the corporation of New Zealand is not confident about future profits. Got it. Great. So for it to be confident, we need positive global macroeconomics, right? Right? Therefore, New Zealand dollar would be going up. Okay, great. With that being said, what's the likely outcome for oil demand in that scenario? Oh, did I say hawkish? I'm sorry. New Zealand is dovish, but for it to become hawkish is what I was trying to get to. Okay? Okay? How do we go from dovish like it is now to hawkish? You need positive macroeconomics. You following me? No, I must have completely misspoken or something. You guys are completely off. All right, let me say it again. Right now, New Zealand economy sucks. I think we got that clear. That's what the RBNZ has said. Reserve Bank of New Zealand, RBNZ. Right now, New Zealand sucks. Yeah, it's pretty great, but the economy sucks. Great. Therefore, the New Zealand dollar is weak. All right, so let's change our hypotheses. Let's say I'm bullish on New Zealand. I love New Zealand. All the economic data is fantastic. I want to buy it. I'm hawkish. I want to buy as much New Zealand dollars as possible. This thing's going up. RBNC is going to raise interest rates. Wow, everything's booming. Great. In that scenario, what is oil likely to be doing? Going up or going down? Oh, I love VIX. I love VIX. It's like free money. Okay. Okay. Up. Yes, up for oil. If New Zealand's booming, that's a big thumbs up for global macroeconomics in general, which is a big thumbs up for demand for energy in all commodities, really. Gold and oil, but also platinum and silver and copper and whatever, okay? Everything's booming. So then how would you get this to go up? Right? No. Whoa, 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 whoa. Photocreativity.com says, so VIX is down and oil's down? I didn't say that. Who said that? It's just a volatility index. Okay? Now, first of all, you can correlate as much as you want, but what is VIX? It's the ratio of options purchased to hedge against a fall in the S&P 500. That's what that is. Okay. So anyways, so trading this right off the bat doesn't make that much sense to me, especially to the upside. But to the downside, oil's going up, but New Zealand is falling. So this, all it does is isolate oil. But yeah, okay, so you can get the short. But if you were to look on this on the long run, say, what's the difference between the long run and the short run, by the way? Does anyone know their economics? Well, in the short run, you can't adjust some of your variables. In this case, like, let's say all macroeconomics right now is tepid. So New Zealand is weak, and really oil shouldn't be that strong. But so let's say New Zealand is sort of fixed. It's not hawkish, it's dovish. And oil right now is hawkish, but that's just a supply and demand geopolitical thing. But on the long run, it should also be neutral as well, because the powers affecting New Zealand are also affecting Canada, and they should be relatively the same. So therefore, since Canada is an exporter of natural resources, and New Zealand is an exporter of natural resources, I would try not to trade them against each other, because in the long run, it doesn't make sense. Now, in the short run, one might be stronger than the other, but if oil weakens, does that mean I should go along Kiwi CAD? No, it doesn't. Because the only thing really happening here is oil's moving. And that's just oil, not macroeconomics. Okay? And there's a difference. If you're just trading it as an oil trade, then it's an oil trade. And by that, I mean you're buying CAD versus anything weak. So if you buy CAD because oil's going up, and then you look and you're like, well, New Zealand sucks. The RBNZ's thinking about cutting interest rates. Good trade on the short run. Okay? Okay, on the short run. Michael says, if Aussie gets bad numbers today, as predicted, as Michael says, as predicted or projected, will that have anything to do with the Kiwi CAD? Well, first of all, there is a correlation between Aussie and Kiwi. You should Google it or do research or find it. Second of all, if it's projected, then it wouldn't be a shock. It's already priced in. See, if you already know, then it's already been priced in. So, Michael, you should think of it this way. If it doesn't come out bad, then the Aussie's going to rally. And that still will impact Kiwi CAD to some degree. Now, for one thing, for example, if the Aussie news does not come out bad, as you say, then that could be a positive sign for global macroeconomics. That China is booming, and you saw the numbers recently. China is recovering quickly. So if we see that in Australia, we'll probably also see that in New Zealand and Canada, and they all wash each other out. You wouldn't be trading Kiwi CAD long. It just doesn't doesn't make any logical sense. Now, you might have the price action, but it doesn't make logical sense. And therefore, even if you're making money on your Kiwi CAD, there's probably, I would say, almost certainly a much better trade for you to be on, right? Like this one would be better. Okay, can you see that? This one would be way better, right? So what does the swing trading group do on Friday? We're there and we're like, you know what? This would be better to buy it here. Yeah. What's our target? Here. That's what we do at our swing trading group. How about the week before? Yeah, you know what? This would be a good place to buy. Oh, yeah, you're right. This should be our target. Okay. What do we do at the swing trading group? Hey, look, this is a monthly buy. If you buy it here, you should hold it way up here. I can't even see the target. Up, 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 down, down, buy. 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 Up. Oh no, I'm giving away my secret. I was listening to an interview with this old guy that's been around for a long time, and literally 7 of his closest friends have won Nobel Prizes in economics. One of them was Scholes, or was it Black Scholes? One of them, anyways. And he said after Black Scholes published their options stuff, he started trading it because he was like, "Hey, man, do you mind if I trade with this?" And they're like, "That's what it's for." So he starts trading with the Black Scholes pricing model for options, and he's making money. So the interviewer was like, "Really? Like, wasn't it published? Like, once it's published, doesn't it lose its edge?" And he's like, "Look, I walked around the trading floor handing out the math. They're like, hey, but no one can understand the math," which is funny. Also, Paul Tudor Jones says something similar too. He's like, people come up to me and they ask me what trade I'm on. And he's like, it's the dumbest question. Dumbest question. Because by the time he's done it, the trade's over and he's working his way out and he's already planning the next trade. Right? So anyways, this is a buy, yo. Right? And if you don't know why, you should absolutely totally freak out. I'm telling you, you should freak out that this isn't obvious. Okay? This is a buy. This is a take profit. Boom. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 take profit, get out, go home. I don't think so, Mike, but he was around then. Yeah, right, Michael? What are you going to do next is a much better question. But whatever. Chuck says, all the talking heads are saying there's going to be a miss. Well, then that's priced in. And so if it comes out a miss, it's not going to be much volatility. If it comes out as a gain, everyone's on the wrong side of the trade. Remember, the dumb money is going to trade, like dumb money will risk money on what they saw on TV. Right? And with smart money, we'll wait. And if the right, because the thing is, if the news comes out unexpectedly good or not bad, then all the dumb money is on the wrong side of the trade. They're shorting. Just imagine 10,000 stupid people with money to burn have dropped money on an Aussie dollar short, and the numbers come out good. Well, they all have to get out. Right? Yeah, right, Mike. Yeah. Right, what are you going to... Well, there's the 3-second rule, right? Remember that one? I wish I could put it on a t-shirt, but the letters would be too small. But it's like, sit down, shut up, get ready for the next trade. That's what it's all about. Yeah, so Chuck, do you think the news is going to come out so bad that like more people are going to want to short more? Well, that's your prerogative, right? The interesting thing about a heavily short market is eventually they got to get unshort. And that's what I really like the Commitment of Traders report about, where you can watch how you can trade the unwind, right? You can trade the unwind. All right, so let's go through gold and oil, huh? By the way, thank you for subscribing, guys. Subscribe. Come on, commit. You gonna commit? All right, there's some hope here, yo. Is anyone gonna try? When I mark something up sideways, these moving averages, especially the 2155, die. So I want to make it clear I don't see them. I think I want this box, but I have to pay money for the box, don't I? Yeah, buy now. How much is it? I don't really want a box. I want a shaded area. I guess I'll have to pay them money. All right, well, I have no problem with that. I gotta go. I'm gonna put it back. I'm just trying to draw. What is this? Highlighter. Maybe I need a highlighter. What's the difference between a highlighter and a pen? Highlighter, pen. Boy, that looks a lot like a pen. That looks a lot like a pen. All right. Anyways. Okay. I'm looking at it this way. Oops. I'm trying to get this straight, yo. Okay. I'm looking at it sideways. There's no trend. Therefore, there's no market. So I don't need this 2155. It's dead to me. So in my mind, I just don't even see it anymore. So a lot of people complain, when you have too many lines in your chart. Well, right, I have a beautiful mind. That's why. All right, let's put it this way. Okay, good. That's all that exists now. There's no market, but there's price. Okay? There's no market, but there's price. So all I see is a top here and a bottom here. So the way you trade a range is a 5A cross up. So a trade plan now would be drop out of the 4 hour into a 1 hour or into a 15-minute chart and do this now. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 and get to here, cash out. Okay. You know, I think what the highlighter is it's more transparent. Let's see. Yeah, it's just more transparent versus a pen. Let me do a pen now. No, that's pen. Yeah, it's just more transparent. That's pretty nice. I like it. Cool. Yeah, we'll do pen. Or I mean highlighter. All right, clear. All right, was that helpful to anyone? Captain Obvious, but sometimes it's really important. Well, once you have strategy done, Brooke, yeah, you drop into your dailies. Yes. Okay. So you're going to want to drop into something smaller now. Okay. And now what? See, I've made a decision strategically, okay? Strategically, I'm a bull. Now, I could be wrong, but at least I know what I'm doing, okay? You understand? I can be wrong. I can be absolutely certain and still be wrong. But absolutely certain is better than trading by the seat of your pants, right? So what do I want now? I'm looking for scenarios of up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, right? I'm going to try to do that until we get to the top of the air, top of our range. Okay, maybe that's easier to see. Okay. Remember, there's no market, there's no trend. We're just ranging. So all we're doing is taking it from the bottom to the top and getting up. You want to add MACD? Isn't this one? Whoop. I don't think it's this one. Which MACD? I haven't manually added MACD in a long time. I thought it was that one. Maybe it's just the colors are off. Right? Not that helpful. Okay, because MACD measures market. Okay? It's hard to see, so maybe you didn't get it. So what if MACD measures market, what measures price? My pleasure. Make sure you guys subscribe. Also, I appreciate the thank yous and stuff. Make sure you show your thankfulness. Remember, you cannot be a happy human being unless you're grateful. Did you understand that? You cannot be a happy person unless you're grateful. It's not possible. You could have all the money in the world, all the riches, the jewels, the cars, the houses, but if you're not grateful for them, it doesn't bring happiness. So if you're grateful for these webinars, make sure you pay it back. Visit tradersway.com, open up at least a demo account, and give them the opportunity to earn your business. Now, it might take you and me working together for years and years and years for you to become a success and confident and all that kind of stuff to open up a real account. That's fine. We're cool with that. Okay, but make sure you show it, right? Pay it back. All right. So now, if we don't use MACD, because MACD measures the market, and I just showed you on this area, there is no market. Okay? There's no trend, there's no market. So what can you use to help you time the entries of your trades? There you go. So what's the first step? First step is what I've already done. you identify your support and resistance. If we're down here, I know what I'm going to do. Oh, that's called a trade plan. Okay? And then up here, if we're up here, it's less perfectly defined, but there's definitely something going on up here. So I think I'm going to play it more like this level. Okay? All right, so I know what I'm going to do here, 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 and here. Done! I already know that's called strategy. So now what? When I get to one of those levels, I look to stochastics for an entry. Now, what about all these other crosses? Irrelevant. Irrelevant, irrelevant, irrelevant. Assimilation, right? Resistance is futile. What's relevant? There's only two things relevant in our world: support, resistance. Everything else is irrelevant. Everything else is irrelevant. What about this? What about this? No, everything else is irrelevant. If you're at support, you're a buyer. If you're at resistance, you're a seller. Everything else is irrelevant. But what about my CCI cross? I don't give a damn about your CCI cross. Okay? What about MACD? Hey, what do you mean MACD? MACD measures the market. There is no market. There's only price. Okay? Therefore, see, like, let's address that for a second. Why do I say there's no market? Well, there's two markets in this planet, right? There's a bullish market and there's a bearish market. And we said the market's moving sideways. It's not going up, it's not going down, it's just sideways. So is it a bullish market or is it a bearish market? What's up, BM? A coworker sent you to it? Right on. Hey, if you're trying to get good and you're trying to speed things up beyond these free webinars, consider fxbootcamp.com, huh? Right, Gary says neither. Michael says pigs, right? And pigs get slaughtered, right? I say if it's moving sideways, there's no market. It's not bullish. It's not bearish. So why are you using market trading tools like MACD? MACD measures the market. There is no market, so why are you using MACD, right? So anyways, let me clear this out. When we're at support, I say I want to look, okay? When I'm at support, I want to take the Stokes cross. I can only buy, I can't sell. Well, what about this? Meaningless. 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 Meaningless, 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 nada, zip, zilch, nothing. All meaningless. Okay? Are you watching Next Generation? So you just watched Farpoint, right? Is the first one? Yeah. Cool. Yeah, if you don't know the name of your Star Trek New Generation episodes, you don't know Star Trek New Generation. All right. So, see what I mean? Irrelevant. You only trade at support and resistance, so you have to identify your support and resistance. Now you might get some price action. Okay, now you might get some price action. And that's where you're trying for up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 and right. Well, you'll see that 5A crosses are very similar to stochastic crosses, but it depends on what time frame you're looking at, right? That's why you drill down. Okay. Are we at resistance? Yes. Can you sell here? Yes. Are we at resistance? Yes. Can you sell here? Yes. Right? Do you sell here? No. 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 Let's do gold and oil. Okay. Down, 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 up, up, sell. That's all there is. Remember how the market started in the month? We concluded, right, at the beginning of the month that this was a buy zone. Okay. Most importantly of it, the timing of that was you were a buyer here. Okay, you were a buyer here. Why? Well, it's just a timing issue. You're at support at the beginning of the month. You're a buyer. Did you make money? Yeah, probably. Cool. But on that day, we also knew where the bears were going to live, right? Plan A for sellers, that's plan A right here. Plan B is here. Once again, we go through this in the swing trading group. If you want to join us, you have to join the swing trading group at FX Bootcamp. Okay? Bulls buy here, they bought it and they made money. Bears sell here, and they made money. Okay? We don't know which one's going to win, but we know where they want to go. So one of the things we know for sure is the plan for bulls was this. The other thing we know for sure is the plan for bears was this, and it's even a little bit lower. We can't even see the target. So all you need to do at the beginning of the month is decide, which one are you? And it's amazing how people refuse to make that decision. It's amazing, isn't it? So here's what bears do. Here's the first day right here. A bear says, "This is what I want." Done. Took a second, maybe 2 seconds. We'll say 2 seconds. Let's make sure. Took 2 seconds. But also, right? Bulls wanted this. Cool. Done. So, bulls had a good run. It went from here, what is that, a buck and less than 1,300. So 1,280, and it went up to 1,310. Hey, that's all right money. And this is just as valid. So far, they seem to be winning. Okay? So once you get below this, there's no buy, right? So that's dead now. So now we got to move over to this. So because the bears have won, now sort of this is what's going on next. Okay. Cool. Let's move over to oil. Okay. What is expected is this. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 up. This one, less predictable. Hit here, you're supposed to stop trading. It's very clear. And you're like, oh, but Wayne, it's way up here now. So, unpredictable. Unpredictable. That's all. What's the big deal? Okay, if you want it, let it come back and buy it. That's how you trade, yo. So you never get upset about, oh, it went higher. Yeah, well, that was unpredictable. So why would you care? What, you were supposed to know? I don't think you know. I don't think so. So if you are a bull, by definition, this is where you take profit. If you don't do that, you're just not trading properly. That's all. You should be out of the market for 2 weeks here. 2 weeks, you're sitting on your yacht in the Arabian Sea. And now it's broken out. You're like, oh, well, that's interesting. So you're going to buy it here, right? And that is a valid purchase at this price. That is valid. You guys see that? It's actually next month's plan. Okay, it's just a swing. But you're going to need a dip. You don't buy high. Who cares? How do you trade a breakout? Wait for the pullback. Okay. Is it crude oil that supports rice stocks? You know what? I am sorry, but I don't know. I don't know. Rice is an interesting thing. Rice is, what do you call it? I can't think of the name. A Geffen good, isn't it? Isn't rice a Geffen good? So I'm not sure how that would play out. So let's say I drink Coca-Cola. Okay, and prices for Coke go up 300%. What am I going to do? Well, it's a Geffen good. It's a different type of staple, but we'll get this. So what am I going to do if Coke goes up 300%? By Coke, I mean Coca-Cola. What am I going to do? Pepsi. Cool. Thank you. Yeah, Pepsi. Okay? I drink Pepsi instead. Rice is an interesting thing because, well, first of all, rice is rice is rice is rice is rice. Okay? And when the price of rice goes up, well, you know what? Let me change this. I think I went a little too micro. Let's go a little more macro. What if just soda goes up? All soft beverages, soda goes up by 300%. You drink more water. Let's put it that way, okay? You're like, I can't afford soda. I don't want to pay, $8 for a Pepsi. Okay? You just don't want to pay it. So you drink water, you drink juice or something else, but you just change your preference. Now, rice is interesting because when the price of rice goes up 300%, what happens if it's a normal type good? If price goes up by 300%, demand should fall, right? Well, with rice, demand goes up. If rice goes up by 300%, people buy more rice. And then, so the question was, how does oil affect rice? And I don't know. I don't know. That's an interesting question. I really don't know. But rice right off the bat is special. So if we're seeing inflation in energy, okay, then imagine poor economies. Let's just say poor economies. You're in some poor Southeast Asian country that imports energy. Oil prices go up. Okay, energy prices go up. Things get expensive because they're importing now. They have to pay more for oil. So you're spending a lot of money on oil, right? Which makes the wealth effect of that makes you poor, and you end up, right? So therefore, you have less money to spend on rice, which means rice in terms of your income has gone up in cost. And because you're more poor and because rice is expensive, you buy more rice because you can't afford the substitute. You can't afford bread or wheat or meat. So you'll also eat less beef, and you'll right, or even protein, less protein, you'll eat more vegetables. By the way, that reminds me, there's something going on in China with pork. They have to kill basically all their pork this year. And something like 30% of the world's protein is going to be gone, destroyed. 30%, I think I read that right. 30% of global protein. That's how much pork is going to be removed from the market. They're going to slaughter and burn all the carcasses. So your food's going to get expensive. How do you make money? Think about it. I'm not going to answer it today, but you should sit down and think about it. Like, all right, pork is going to go up, but also beef is going to go up, chicken's going to go up. Who's going to benefit? Who's going to be hurt? What are the substitutes going to be? What is the change of cost in the supply chain? All that kind of stuff. Make money. That's your job. Make money. Okay. All right. You want to do some yens? What do you think? Is it doing it? You're going to need to make a judgment call, aka a plan. What's your plan, my friend? Okay, remember when we were up here, let me change color. When we were up here, we said it'd probably come down here, right? And I drew it all out, and double top and the drop, and lower high, and then lower low, and then. But you're in a spot now where you should be making some serious plans, okay? Which means you're either right or you're wrong. If you're right, you make money. When you're wrong, you obviously are wrong, and you're going to lose a little bit of money. It's not magic. Okay, what are you looking for? If you're a bull, reversal patterns, crosses. I prefer someone else to take the risk. So I'd like to see something like this first before I go. I'd like to be a buyer here, right? And then maybe even after that, buy a second dip. Okay. Let someone else lead the way. Okay. But what's my bullish trade plan for the week? Right here. By Friday, I should be sitting on that central line. Well, the issue is the level of central bank participation creating distortion. Okay. So, Michael, the less and less and less central banks manipulate the market for whatever purpose they're doing, it should improve. But the thing is, we need positive, strong global macroeconomics, and the European socialist pig dogs are ruining everything for the rest of the world. So as long as the Europeans are choking on their own blood, they're holding back. They're holding us back. I mean, come on, it's been 10 years, fix the problem. It's still amazing though, isn't it? The European response to the Greek financial crisis was to jack up taxes and cut spending. You're like, oh, that'll spur the economy. Like, it's just amazing, isn't it? Oh, too many Europeans. I've upset Europeans. They're like, Wayne, austerity works. Really? All right. Do you know any rich people? And if you do, did they get rich because they saved? Saving is good, by the way, if you're rich. But, right? Did they get rich because they saved? I mean, it's hard. I guess it depends on what you mean by rich. Because that used to be like the American dream, right? Because I hesitate because I do remember as kids, richer people than me, which was everybody, but there were like these old guys that were in World War II, and after World War II, they got good engineering jobs or good banker jobs, and they stayed at the same company for 30 years, and they owned their own home, and they squirreled it away, all their money, and they retired with an RV, and they owned their home, right? But such a small moment in time, I think. And of course, when they went to retire, they sold the house for 500% more than they paid for it. And now our generation's poor. Why? Because we paid for that guy to retire. But I guess what I'm getting to is penny pitching is not how you solve a financial crisis. Jacking up taxes and cutting spending is not going to save an economy. Investment does, right? Like, businesses don't spend, wealthy people don't spend, because wealthy people are businesses. They're owners. They own trusts and LLCs and stuff. They own apartment buildings, they own stock, they own corporations. Most people make money because they run their own small business, but they're owners, right? They're corporations. They don't spend money on yellow Lamborghinis. They invest, right? They invest. So this whole idea of we're going to save Europe by not investing. We're going to turn the lights off, right? And we're going to turn the heating off, and we're going to save our way into prosperity. It just doesn't, that's not how money works, right? You need to invest. Anyways. I'm still sort of numbed by this, but if you wanted to be a bull, okay, we have already planned all this out, right? You can see. So you got to get a turn to the upside here. That's plausible. I think we covered that yesterday. Okay. You see what's going on here? This is bears selling. Here's their target. Okay. There's a little bit of support there, so you're going to need to get some up if you're a bull now, right? So therefore you drop into this and say, you know, you want to observe a bullish pattern. And it's a little too low already, so it may have just not happened. There was a small chance of this, right? But it doesn't look like that's happening in the moment. But maybe it pops up. Go out to the hour. Yeah, looks like it's just ain't going to happen. I would start planning next month's trade, really. Okay, this destiny was supposed to be higher. Okay, and it just didn't happen. We were supposed to be up here, so that didn't happen. So yeah, if you're a bear, you could be, well, you were supposed to sell here, and you could be working your way down here. If you're a bull, it's not a lot to be bullish about, but maybe a turn that way. So in this case, if this is coming down, what the markets are telling you is Saudi Arabia can easily replace Iran, right, as far as global oil output. So this spike in oil is short-lived, is what this is telling me. And it makes sense. It's nonsense for the market to jump 5% or something when you just know Saudi Arabia, boom. So I think there's a half meeting in, when is it? In like 3 weeks, isn't there a half like mini OPEC meeting? And then isn't there a big one in June? I can't remember. Is it middle of May or is it the beginning of June? Maybe it's June. There's a big OPEC meeting coming up. And by then we'll find it. It's fine. Also, even the United States could possibly just replace Iran. But Saudi Arabia is a swing for sure. Okay. Okay. Out of position trade. Okay. You can see it worked that way. So if you're a bear, this is an out of position swing trade. And the way you trade it is you trade it off the 21 on the 4 hour, and that worked just fine. Of course, this is the trade. I believe we talked about it yesterday, the role reversal. So the big news came out. Great. Wait for it to pull back. You have to have patience and discipline to wait for the more obvious trade. Okay. This is working its way down. Typically, in a scenario like this, it hits the target early in the week. Well, it's still early in the week, which means typically it's between Tuesday and Wednesday. We should be here. Okay. And if it does it today, you have the chance for a counter trend trade. So if you want to be a bull on Kiwi or bear on yen, that's what you would look for. You're like, well, if this hits Tuesday, definitely you prefer before Wednesday. Wednesday's okay, but you prefer Tuesday. So the next 18 hours, really. You can get it down here. You have permission to consider a counter trend, but this is where bears are supposed to get out. Okay. This top predicts this bottom, by the way. So once again, I think we covered this on a couple of previous trades on different assets, but it's the same thing. If you're a bull, this was a very obvious buy. If you're a bear, this was a really obvious sell. And that's all there was. That's all there was in this market. You might be complicating things. Have you asked yourself that yet? I don't know if you guys do things like take yourself on business planning retreats, like I recommend. Oh, thank you, Chuck. That's late in June, though. I thought it was May 25th. June 25th? All right, cool. All right, there must be another one. There's a mini one somewhere in there. Okay. So, anyways, you should really look into simplifying what you do. Okay? I think you'll find you're complicating things. And maybe you don't know strategy. I mean, that'd be the question, like, do you know if this is going up or down? Like, I mean, for the next 3 months. And if the answer is no, that's why you're struggling. Okay? Because if you knew if it was going up or down, it'd be easy, right? Well, the funny thing is it's still not easy. You'd be shocked, right? But the thing is, it's going to be impossible. If you have no strategy, you're not going to win the war. Athletes know this very well, by the way. Athletes know this very, very well. You can get talented athletes out onto the field or the ice or whatever the case may be, out on the court. But without strategy and without teamwork, you'll get whooped. Doesn't matter. Talent is not the most important thing. Okay. Anyways, I want to point this out. There's a breakout here, right? That's the price. Right? That's the pricing in of the news. Okay. Let me. Yeah. All right. So. Okay. Pay attention to that. Half of this is because you can't sell. Okay. Well, Michael, once again, being bearish on Kiwi is one thing, but that would then make you a bull on yen. Okay. So you wouldn't say macroeconomics sucks for New Zealand, but it's good for everybody else. See, macroeconomics, positive macroeconomic growth weakens the Japanese yen. Okay? So more importantly than anything, before you analyze any currency, what you really are asking yourself is risk on or risk off. Which one are you? Once you understand that, I don't care what your choice is, I think you're going to make money. Simplify, guys. Simplify, simplify. What you've been doing probably hasn't been working. That's why we're a community. I'm trying to help. The most important question you can ask is whether you believe for the next 3 months or 6 months or 12 months, doesn't matter, pick a time frame, and you're either on the risk on team or the risk off team. If you don't know what that means, you don't know even the basics of fundamental analysis, and that might be your problem. Once you know just the basics of how the world works, money-wise, how the world works, right? Then you can pick a team. Is the world working okay and getting better, or is the world not working okay and getting worse? It's your opinion. You're probably right. I don't really care which one, because you're probably somewhat relatively right. Once you got the team figured out, are you a risk-on player or a risk-off player? Now you know what to do. The rest is just timing. And that's what technical analysis is, guys. It's just timing and price. What time and at what price will you buy? What timing and what price, like when and at what price will you sell? Both these players are probably going to make money, and that's what will blow you away. You think maybe you have to be right all the time to make money? No. But you need to be a good trader. And if you don't know what you're doing, it's just impossible that you're going to be a good trader. You just can't. It just won't happen. Cash is $1.5 billion gold dump at 8:30. Whoop, whoop. Ooh. By the way, that's not a lot of gold. Kiwi getting crushed. We already covered this. This is when you seriously need to start taking profit. Somewhere in there. Pound dollar. Okay. Going nowhere fast. It's still more bearish than bullish. Right? You can see that it's struggling to head up. Right? Once again, let's simplify. If you simplified as a trader, you would have been a buyer here at the beginning of the month. Oops, come on. Let's do this again. No, do this one. You would have been a buyer here at the beginning of the month. You would have been a seller here at the beginning of the month. And that's it. That was your month. And you come back and you're looking and, well, you're basically break even as a bull. And you're modestly profitable as a bear, and we still don't know where this is going. But there are amateurs making hard work of losing money. They're all in here getting sliced and diced, death by 1,000 lashes. Simplify. Pick a team. Okay, so if you're risk on, let me do it this way. If you're risk on, red. If you're risk off, blue. Done. Okay. Simplify, simplify, simplify. Okay. Is this bullish or bearish? I don't know. Okay. But what would a bull do? Okay. That's a bullish trade plan. What would a bear do? There's a bearish trade plan. Done. Done. Make it simple, guys. Make it simple. But you can't do that if you don't know what team you're on. Okay. Any last requests for particular currency pairs? How can Uncle Wayne help? Thank you, BM. Make sure you subscribe, right? Make sure you leave a comment. Make sure you leave a thumbs up. Oops. Sorry, Ali. I didn't mean to do that. Okay. Euro Swissy, Euro Swissy, Euro Swissy, Euro Swissy, Euro. Oh, wow. Okay, I got lots of Euro Swissies. All right. I probably even have a Euro Swissy somewhere. Okay. Yeah, easy. Oh my God, easy. Take profit. Done. Next. What else do you need? You're about an hour late, though. I should point that out. At least. See, I wouldn't have cared. Honestly, I wouldn't have cared. I would have gotten out here. You're like, oh, but it. I don't care. It's crumbs. Okay, but yeah, great trade. Easy, super easy. Yeah, that's a super easy trade. Check it out. Right, your buyer here. Oops, let me do black. And it's too fat. All right, so your buyer here. That's pretty obvious. Sellers would have been here, but they didn't exist, so they're not there. And this is your first take profit zone. This is your second take profit zone. Yeah, straightforward. Done. Easy. Easy, guys. Great trade. Boom. Done. Take the rest of the month off. That's easy. Check this out. Go like this if you want. Or, I mean, yeah, I guess we can do it this way. Let me click in if it'll allow me. I need a smaller. Okay, let's do this. Okay. Right, up, 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 down, down. No, I need it thicker than that. Up, 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 down, down. Right, roll reversal, buy. Right, up, 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 up. Drag this across, roll reversal. Right, buy a dip. Up, 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 up. Drag this across, buy the dip. Up, 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 oh, 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 really took off here. Buy the dip. Up, 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 up. Drag it across, buy the dip. Up and out. So there's 1, 2, 3. So I think this would have been a take profit on these 3 trades. And then you could front run here for the 4th trade, and that's it. So I think there's a maximum of 4 trades here. We can explore this a little further. Let's put this one back. Every breaking wave on the shore tells the next there'll be one more. And every gambler knows that to lose. All right, so down here somewhere is where the month started, right? April 1st. All right, there you go. All right, so on April 1st, because of the monthly pivot point, you decided to be a bull. You following me? I'm going to use this baby blue, and I'm going to put fat here. I'm going to highlight the buy zones. You're only interested in buying because you have a strategy. What's your strategy? You're a bull. Why? The month started at the monthly bullish pivot, and you're like, because if this continues to hold, we're going to go up there, right? By the way, so we know this was the entry pivot, and this is the exit pivot. We know that. So we knew that. There you go. So that was the projected month. So now I need to change colors because I just drew that, but well, let's do black, I guess. We'll do black. No, we'll do dark orange. All right. So now, based on strategy, we're done. We're done. We know the strategy. I'm not even looking at weekly pivot points anymore. I'm only looking at daily. So what I'm doing now is I'm threading together a series of daily trade plans. It's called trading. Okay. And if you don't know how to do any of this, fxbootcamp.com, fxbootcamp.com, fxbootcamp.com. All right. So let's go. I had 3, 2, 1. This is a buy zone. 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 This was a buy zone. This is a buy zone. This is a buy zone. And this is a buy zone. All right. So let's now move to black and say, yes, there was a trade here. Yes. No. Yes. Yes. These are check marks. No. Yes. No. Yes. No. Yes. Yes. No. Yes. Yes. And that one's not perfect. So it's very close. So 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trading days out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So 9 out of 16 days gave you straight up obvious trades. Day trades. They're worth, I'd say, minimum 50 pips each. And the other ones were just never gave you a setup. That's it. Just wasn't a trade. Am I complicating things or am I simplifying things? No, Michael, you're completely backwards. Money going to Europe is bullish. Yeah, you're totally, completely wrong. Yeah. Am I bullshitting you here, to be frank? Or is this something that you should be striving for? Hey, if you don't believe it, you ain't going to try it. You're certainly not going to do it. Yeah, what I would prefer is um, well, you didn't get any entries. How could you be a bear in something that bullish? That would be a bigger question, Jim. Right? You that's the part. If you're a long-term bear, like you're a bear for the rest of the year, for example, then you just didn't get any trade setups. But if you looked at that over the course of a week and you're like, man, this is so bearish, then you need to worry. You know, is that really bearish? Right? Is it really? Um, Let me go back to that pair though. I want to show you. I want to go back to the strategy part. Okay. I gotta move this into. Okay. All right. The only place you can be a bear was here. Okay. So once we got past that, you're done. There's nothing. There's no trade for you until here, actually. And now you need it to become like this, right? So there is no other hope. Now, if you don't understand what I'm talking about, that's the blaring. We just found it, right? Right? Well, Michael, whether it's VAR or ECN or fixed, it doesn't really matter. But so, anyways, um, if there are pieces missing here, guys, like I'm explaining things. You're like, wow, I, I, what he's explaining seems so powerful, but I'm missing a giant piece. Like I don't know why he's so certain it's bullish, or why he's so certain it's not bullish. Um, then you just discovered the most important thing in your life right now, besides the loved ones around you, and that is there's a gaping hole in your knowledge. And if you can get it fixed, you'll probably be a successful trader. And that's what I'm trying to bring. Michael, not in terms of money. I mean, it depends on what you mean by a lot or high. But it's high because a peso isn't worth very much. You need to think of it that way, Michael. Right? It's like going to a bar in Mexico and say, damn, it's like 20 pesos for a Corona. Well, what's 20 pesos worth? I don't know what the actual exchange rate is. I know we were just looking at it, but you get my drift, right? Or going to Thailand, you're like, 20 baht? And then you find out 20 baht is worth like 50 cents. And you're like, oh, wow. So right now you're bitching and complaining. You're like, oh my God, did you see the spread on Mexican peso? And then you find out it's like 50 cents. And you're like, oh, well, gee, in that case, it's not a big deal. Well, it's relative to the size of the move, sure, but it's also to the cost of the value of the currency. So years ago, I remember I was trading Thai baht Japanese yen, and the spread was like 500 pips, but I was making 2,000 pips a day. 2,000 pips a day, the greatest trader in the world, and I could buy like a latte with my 2,000 pips, right? So it's just funny. Like, don't get caught up in the numbers, get caught up in the value, the money. That's what we do. Everything's relative, right? So yeah, think about it. The spread, the USD versus the Thai baht, the USD versus the Mexican peso, the USD versus the Turkish lira. You might say, oh my God, the spread's huge. But then again, you're comparing that relative to the very, 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 very cheap currency, right? So it might not actually be in real terms. So you might So one experiment you might want to do is take a mini lot on euro dollar, take a trade, okay, during normal trading hours. So like right now would be right. Yeah, I can't remember. It was a long time ago with the 2,000 pips, but it wasn't big money. But anyways, so during normal hours like now, take a mini lot, let's say, on euro dollar. Forget about pips, look at the cost. I'll just make up a number. Let's say it's $2.50. Okay? And then you do a mini lot on USD Mexican peso. Let's say it comes out $4. Okay? And then, and someone else mentioned, relative, yeah, Yarn says relative to the move, right? So let's say on a typical day too, let's say euro dollar moves 75 pips and Mexican peso moves whatever it moves, right? And then you look at them and say, is $4 truly unreasonable? And so let's say USD Mexican peso moves twice as much as euro dollar, 150 pips, and only costs 50% more, and you're like, well, actually, relative, it's actually cheaper, maybe. But you might also just find by the time you add up the cost, it's not so ridiculously more expensive that you would throw away an opportunity staring at you with the USD Mexican peso. You know what I mean? Michael says, so the idea is to know if you're a bull or a bear at the beginning of each month. I would take that further than that, because in the beginning, most newer traders are just not very good at making these decisions. So to make a new decision every month gives you the opportunity of making the wrong decision 12 times a year. So I would rather you say every 3 months you answer that question. Kenneth says, Wayne, can you be successful only as a technical analyst using price action and pivots? Yes, but you'd never be a professional. Right? I mean, like, why? Fundamentals are too complicated? I mean, it's just like, why would you not want to know the full picture? It just doesn't make any sense, right? I was trying to think of an analogy like a doctor, or something. Anyways. Yeah, so Michael, I said more important than anything is whether you're risk on or risk off. So I know what I'm doing in January, February, March. I just know. I know it before it happens, and I actually have it down to the week. Great, cool. I know what I'm doing in September, October, November, December. I already know what I'm doing. Right on. Sweet. Right? I know what I'm doing over the summer. Cool. It's very helpful to know what you're going to do before you do it. And also it brings you, even if it's a false level of confidence, a level of confidence that you need. So I realize I don't have control over the market, but at least I have full control over my behavior. Okay? And there will be times where I'm wrong, and that's totally fine. Right? Because I let my winners run. Remember, I teach you these things. Okay? If your average loser is minus 33 and your average winner is plus 66, you can lose a lot of trades and break even. Just think of this math, right? 6 out of 9 trades. 6 out of 9 trades can be losers. And your loss equals 0. That's why it's important. Cut your losers, let your winners run. And you could be really, really, really bad as a trader and not lose money. So whatever you're doing, you're not doing it right. And that's why you're here every day, and that's why I'm here every day to teach you. So if you can suck less than that, and remember, that's the terminology I used in my book. I say, look, when I first started trading Forex, I sucked. I sucked. Because I came from a place of no knowledge of the markets, no technical analysis, no fundamental analysis. Never traded a stock in my life because I was a venture capitalist. Had no interest. Like, what kind of loser would buy a stock? Right? So I started at 0, and there was no help at all from anyone. So I'm completely self-taught. So I sucked more than you can imagine. But over time, because I worked so hard, I sucked less and less. So if you can have those numbers, instead of going from 6 losers to maybe 4 losers out of 9, right? And have negative 33 plus 66. Now you're profitable. You're barely over break even, but at least you're making money. Now give me 10 years and I'll fix you good, real good. Thank you, guys. Would you do me a favor? Just leave a thank you in the comment section below the video. You might have to wait 1 minute and then refresh your page. Would you do that? Leave a comment, leave a comment, leave a comment. Thank you very much, guys. I'll see you tomorrow. There's 4,000 other videos associated with my work on YouTube. Feel free to watch them all. Peace on earth. May the pips be with you. May our profits be above average. I hope you subscribe, and I hope to see you tomorrow.